On December 18th, 2015, Vijay Mallya celebrated his 60th birthday. The lavish party grabbed headlines worldwide. International pop star Enrique Iglesias performed alongside Sonu Nigam. Champagne flowed freely, lights dazzled, and India's elite danced the night away. That evening, Mallya stood tall as a symbol of success, luxury, and unshakable power. But in a shocking twist, just 2.5 months later, he fled the country, escaping charges tied to a 9,000 crore bank fraud. The fall was as dramatic as the party itself. The party was over. He lived like a king, partied like a legend, but vanished like a ghost. This is the story of Vijay Mallya. Let's begin. This story doesn't start with Vijay Mallya. It begins with his father, Vittal Mallya. Vittal was from Karnataka and was known for being smart with numbers even during his college days. He had a sharp eye for business and made good money in the stock market by 1940 when he was still very young. Soon, he turned his attention to United Breweries, also known as UB. The British started this to supply liquor to their soldiers in India. In 1946, Vittal Mallya began buying shares in United Breweries. Over time, he steadily increased his stake and gained significant control over the company. Within just 2 years, at only 24 years old, he became the chairman of the company, an incredible achievement for someone so young. He didn't stop there. Using the profits from UB, he started buying other liquor companies, growing his business fast. But Vittal didn't limit himself to alcohol. He owned 10 breweries, 14 distilleries, 7 processed food companies, 6 investment firms, and many more businesses. Altogether, his empire was worth around 350 crores, a massive achievement at the time. Yet, Vittal remained humble throughout his success, carefully managing every expense and placing great value on discipline and hard work. But being a constant workaholic eventually hurt his physical and mental health. But working too much affected Vittal Mallya's health. In 1983, at the age of 59, he suddenly passed away from a massive and fatal heart attack. This sudden loss led to the rise of his 27-year-old son, Vijay Mallya. Born in 1955, Vijay grew up in luxury in Bangalore. He was outgoing, full of energy, and loved racing bikes, playing cricket, and riding his toy Ferrari through the neighborhood. At the age of 18, his father gave him a place on the board of United Breweries, introducing him early to the world of business. After finishing his college education, Vijay went to the United States to study international business and gain global experience. But after his father's sudden death, he had to return home to take control of the UB group. Unlike his father, who was calm and disciplined, Vijay quickly became known for his bold personality and party lifestyle. Many senior managers inside UB doubted his ability to lead. They weren't sure if he could handle such a huge business. But with the support of shareholders, Vijay Mallya was appointed as chairman, and stepping into his father's shoes and beginning a new chapter, he was determined to show his worth. Vijay Mallya didn't just stick to liquor, he wanted to expand. Believing there was a bright, growing, highly profitable, and rapidly expanding future in the fast food industry, he launched McDowell's Pizza King in Delhi and Mumbai. But in Mumbai, things didn't go as planned. The city's famous dabawalas already had a strong grip on food delivery, offering cheap and efficient service. On top of that, India's eating out culture was still limited. As a result, the Pizza King venture failed to take off. Consequently, except for a few stores, most of his outlets failed miserably. By 1987, the business shut down. After Coca-Cola exited India in 1977, Mallya saw a gap in the cola market. He launched a bold new brand called Thrill, hoping to make big waves in the market and attract attention, but consumers simply rejected it outright. Over the next 20-25 years, he acquired companies and started new ventures across sectors: engineering, chemicals, software, transportation, mining, telecom, but most of them failed. Worse, he sold off some of his father's successful businesses, including Burger Paints, which he successfully sold for 400 crores after years of growth. Today, Burger Paints is valued at over 50,000 crores. But one big breakthrough success eventually kept him afloat during tough times and struggles is liquor. In 1983, UB wasn't a market leader in any liquor category. Though his father launched Kingfisher beer in 1987, it lagged behind Mohan Meakin's Golden Eagle. Vijay realized that no Indian beer brand targeted the youth, so in a bold and strategic move, he rebranded Kingfisher. Its logo, transformed from black and white to a vibrant, colorful flying bird. Golden Eagle's rugged and traditional logo appealed mostly to an older audience, but Kingfisher now symbolized youth, vibrant energy, modern spirit, aspiration, a sense of freedom, and contemporary lifestyle. The tagline, "The King of Good Times." Kingfisher targeted aspirational young drinkers. In 1986, Bangalore saw the launch of its first pub, Ramda, followed by another called The Pub. Unlike traditional dingy bars, pubs had lighting, hygiene, music, and better ambience, drawing classy crowds, including women. Seeing the trend, Vijay launched Kingfisher draft beer there. It became an instant hit. Bangalore was known as India's pub capital. This trend spread to other Indian cities, helping Kingfisher's brand explode. Vijay ensured Kingfisher's visibility, sponsoring derbies, football tournaments, and fashion shows. He launched the Kingfisher swimsuit calendar, introducing stars like Deepika Padukone, Esha Gupta, and Katrina Kaif. Mallya even renamed his mansion to include Kingfisher, turning it into a symbol of urban fun and celebration. His liquor portfolio was now rock solid and impressively diverse. McDowell's Number One, Bagpiper, Royal Challenge, Black Dog, Antiquity, and many more premium labels catering to different tastes. Then came brandy, rum, gin, vodka, even wine, expanding his empire across every segment. Inspired by Coca-Cola's smart and strategic approach of targeting varied audiences with tailored products, Coke for the masses, Diet Coke for the health-conscious crowd, Thumbs Up for bold flavor lovers and thrill seekers. Mallya mirrored that with Bagpiper for mass market, McDowell's Number One for premium, and Diet Mate, the world's first low-calorie whiskey, for health-conscious consumers. For beer, he created Kingfisher Premium, Strong, and Mega. But alcohol advertising was banned in India, so Mallya cleverly used surrogate advertising as a loophole. He launched McDowell's Soda and bottled water, running glamorous ads with Bollywood and cricket stars, indirectly promoting his whiskey without breaking the law and keeping the brand visible to the public. This tactic worked across his brands. By 2004, United Breweries became the world's fourth largest liquor company. Understanding the power of politics and influence, Mallya entered parliament in 2002, backed by multiple major parties, and became a Rajya Sabha MP. By 2005, he stood firmly at the height of his political and business power, yet something still bothered him deeply. He was still seen as just a liquor baron. He wanted to build something respected, admired, nationally celebrated, and globally recognized. So he boldly launched Kingfisher Airlines, a grand and ambitious decision that would eventually lead to his dramatic downfall. Soon after its launch, many passengers began switching to Kingfisher Airlines. It rapidly purchased new planes and aggressively expanded its network across India. But Vijay had bigger ambitions and didn't want it to remain just a domestic carrier confined to national skies. He wanted to go international. However, India required at least 5 years of flying experience for international licenses. Rather than wait, Mallya bought Air Deccan, a budget-friendly low-cost airline that had already completed over 5 years for Rs 1,000 crores in a bold and strategic move. Along with the acquisition came the coveted international license, unlocking global routes. Kingfisher's first global flight took off from Bangalore to London, featuring ultra-luxurious first-class cabins and luxurious. Yet Mallya quickly rebranded Air Deccan as Kingfisher Red and then shut it down, saying Kingfisher wasn't a low-cost brand. By 2008, Kingfisher had captured an impressive 27% market share in the Indian aviation industry, India's largest. Almost every flight flew completely full, but the airline was still operating at a significant loss due to extremely high operating and maintenance costs. Then entered two new competitors, Indigo and SpiceJet, both low-cost carriers focused on bare minimum travel expenses. Kingfisher hoped that after building a strong customer base, it could hike prices, but every time it tried, Indian customers, highly price sensitive, immediately switched to cheaper options. The premium airline model that Mallya spent thousands of crores building was flawed. Customers even stole Kingfisher's branded cutlery. Many of its fancy items were later seen being sold in Mumbai's popular Crawford Market, surprising the airline staff, regular passengers, and even shopkeepers a lot. Food was wasted in huge quantities. Unused beverage bottles were dumped instead of reused. Added luxury meant more flight weight, higher fuel use, and ultimately a bleeding balance sheet. The final blow came with the 2008 global financial crisis. Passenger numbers sharply dropped, business travel slowed down, and aviation fuel prices surged by 23%, putting enormous pressure on already struggling airlines. Kingfisher, burdened with rising debt, high operational costs, and an ambitious international expansion, found it increasingly difficult to stay afloat and maintain its premium services. Lacking reserves, had to return 32 leased planes in 2012. It owed over 1,000 crore to oil companies and couldn't pay its pilots or staff salaries on time. By mid 2012, the crisis had deepened and many planes were grounded due to lack of funds. To keep a few flights operational, parts from grounded aircraft were removed and reused, an act of desperation. In October 2012, after months of struggle, Kingfisher Airlines officially shut down all operations. Yet, during the airline's collapse, Mallya showed no signs of concern. He spent hundreds of crores buying an IPL cricket team and even purchased a private jet using Kingfisher's funds. This jet was luxuriously decked out, with original Picasso paintings worth crores. But all of this cleverly masked one of India's biggest and most shocking bank frauds in history. From the beginning, to fund Kingfisher's growth and plane purchases, Mallya borrowed crores from banks. In 2009, in desperate need of fresh capital, he approached IDBI Bank for a corporate loan. Kingfisher's financial health was already poor, and any sensible bank would have rejected the application. But using his strong political influence, Mallya quickly secured a 950 crore loan in just a few months with surprising ease and minimal resistance. Typically, banks demand strong physical assets as collateral for such large amounts. But in this unusual case, IDBI accepted the Kingfisher brand itself as the main asset. They even hired the consultancy firm Grant Thornton to evaluate the brand, and it was somehow mysteriously valued at a staggering 4,100 crores, raising many eyebrows in the financial sector. Based on that, the loan was sanctioned. Granting huge loans based on intangible brand value is considered highly reckless in banking. By 2010, Kingfisher had 7,000 crore in total debt and had already defaulted on 2,800 crores. The lending banks soon realized they were heading for a huge financial loss with no clear recovery plan. They had two choices: either write off the loans and accept them as NPAs, or lend more in hopes that the new funding would revive Kingfisher and repay past dues. They chose the latter. In November 2010, led by SBI, a consortium of 17 major banks, not only gave fresh loans at reduced interest rates, but also controversially converted 1,355 crore of past dues into equity at significantly inflated share prices, ignoring market trends and investor warnings in hopes of saving the sinking airline. They extended the repayment window to 9 years. Mallya even gave a 250 crore personal guarantee to help secure the massive deal. But once again, the banks shockingly accepted the highly overvalued Kingfisher brand as collateral, completely ignoring warning signs, basic lending norms, safer alternatives, financial red flags, and industry best practices throughout the process. Later, the same brand was reassessed at only 100 crore. By November 2013, the banks knew they wouldn't recover their money and filed for liquidation through the Debt Recovery Tribunal. The court confirmed that Mallya was a willful defaulter, meaning he had the means to repay but chose not to. In October 2015, the CBI joined the case and began investigating him. They found that the ADBI loan wasn't used as intended. Part of it repaid old loans, the rest was routed abroad to buy personal properties. By December 2015, several cases and investigations were active. Meanwhile, Mallya hadn't paid salaries to over 3,000 airline employees. Many people had been protesting for several months without any help or solution. In one very sad case, a staff member's wife, struggling with ongoing money problems, stress, and no support, died by suicide. Despite all this, Mallya was busy planning his extravagant 60th birthday bash. In December 2015, he spent a staggering $2 million in Goa on what he proudly called the mother of all bashes. But this triggered public outrage. Even the RBI governor criticized him. On February 28, 2016, senior Supreme Court lawyer Dushyant Dave urged SBI to block Mallya's exit from the country, but SBI delayed action. Rumors say a top bureaucrat tipped Mallya off that jail time was imminent. On March 2, 2016, Mallya boarded a Jet Airways flight from Delhi to London, first class, accompanied by his girlfriend, carrying 7 large suitcases. It was clear he wasn't coming back. He fled, leaving behind a 9,991 crore bank fraud. Shockingly, 5 months before his escape, the CBI had already issued a lookout notice against him. If he had reached immigration, he would have been detained. But allegedly, Mallya got the notice altered. The revised order said, "Do not stop him, just inform the CBI." So no one stopped him. On March 9th, India's Attorney General informed the Supreme Court that Mallya had escaped, shaking the nation's political and financial foundations. By April 2016, a non-bailable warrant was issued. His passport was officially suspended. The Enforcement Directorate, ED, froze Rs 6,600 crore worth of his assets, including properties, bank accounts, and luxury possessions. India launched extradition efforts, but Mallya delayed proceedings in UK courts. Meanwhile, he continued his lavish London lifestyle, giving interviews, posting online, and claiming innocence. Ratan Tata, too, inherited a business empire, but unlike Vijay Mallya, he carried forward his legacy with integrity, turning the Tata brand into a global symbol of trust. Mallya chose the path of fraud, ruining his reputation and destroying the empire his father built. Today, Mallya's personal net worth might still be in billions or even trillions, but no amount of money will ever be able to buy back the respect he lost.